Happy Friday, everyone. Welcome to the Wall Street Blockchain Alliance's Crypto Roundup. Ron Quaranta here with my dear friends and co-hosts, David Brill and Joshua Ashley Klayman. Before we kick off our usual disclaimers, thank you all for joining us. LinkedIn, Twitter, YouTube. If you've got comments or questions for David or Joshua, please put them in the chat. We're happy to try to address them. And obviously, nothing we're discussing is any sort of accounting, investment, legal, or tax advice. Our opinions are our own, don't necessarily represent the opinions of our respective firms. Josh, David, another busy week. I want to start off by letting the audience know, Josh, this is your weekly brunch locale. To be clear for everyone watching, I know you're getting a Michelin star lunch coming to you soon. But Josh, if we could, I wanted to kick it off with you. There's been a lot that's been going on. The thing that crossed my desk this morning, I'm just going to dive right into it if we could. SEC has been pretty verbose, is I guess the word I should use, in putting forward commentary on things that they were doing previously and how they're looking at crypto now. The thing that really grabbed my eye, and shout out to Drew Hinkes, who had a really great post on it, was the SEC's statement on proof of work mining. Josh, I read through it. I'm not a lawyer, which means I'm a dummy on this call, but what did you take out of the commentary from the SEC on POW?
So thanks, Ron, and hi, David. It's been a long time coming. Right? This is exactly the kind of explanations and examples that we've been looking for. I say that because I think for a long time, people have generally had the sense, okay, proof of work mining, okay, but we didn't have a statement on it. And I think importantly, it's important to remember, and this also goes to the meme coin piece, the Howey test is still the test. Right? This all presumes that these are covered crypto assets, that they are not the types of tokens that otherwise look like other kinds of security, like equity interests or something like that. And I think what this does very well is to say, like, look, yes, it's the Howey test. Yes, you have to worry about an investment of money in a common enterprise with a reasonable expectation of profit based solely or primarily on the managerial or entrepreneurial efforts of others, just for anyone watching at home who needed that refresher. But it also goes further and says, but these things, these activities don't meet that standard. And similarly, even when you have pooling, right, in connection with mining, doesn't meet that standard. And it's those sorts of things that are so important. I will just say, although I know we're going to like bat it back and forth and I'll have a chance to talk more about it. I thought interestingly, I don't know if you guys saw Caroline Crenshaw's statement about it as well.
Oh, I did not. Interesting.
Yes. So she took a somewhat different approach. She was saying, in her view, that the staff, the chairman's office directed the staff to issue, as she called it, yet another non-binding interpretation, bringing the running tally to at least 10 such actions in 9 weeks, rather than engaging in an open and transparent process that benefits from the input of market participants. These supposedly clarifying statements deliver neither progress nor clarity. I disagree. I do invite people to read this, though. I think she refers to what she characterizes as some failures in logic in the statement, but also I think what she characterizes as a flaw, although I don't want to mischaracterize her statement, so please, everyone read it, right? She says something like, ultimately, you have to run the Howey test to determine whether you have a security. But that's beside the point, to my mind. You are always going to have to run the Howey test unless we have a change in law.
Right. So, and Josh, there's a certain irony to reading Commissioner Crenshaw, and again, great mind, and I don't know her personally, noting that what the SEC's chair's office is currently doing is not helping clarity when you've got a good chunk of the industry saying it actually kind of really is helping clarity. David, before I pull you in, I want to pick Josh's brain on one more thing. Josh, you both know I'm not an attorney. There were 2 words that jumped out at me when I read it. And again, Drew did a wonderful job. Shout out to Drew Hinkes. Everyone should read his analysis. This idea of economic property. And Josh, I'm curious about, from a legal perspective, is that muddying waters a little bit? If we're looking at mining, either solo mining or pooled mining, and whether or not something is a covered crypto security, does the phrase economic property force us to have a definition of that phrase?
So I think when they were saying economic properties, I think that like in the footnote where it refers
Yep.
to that, it talks about yield, if I'm remembering correctly.
Yep.
And I think that's what, at least in advice, not legal advice, none of it's legal advice, but in advice that people have generally given about whether the likelihood that a particular type of token may be a security. A lot of times there's been a focus on, is there a yield, right? So that came up in, I mean, who knows to what extent these things will hold now, but at least when we think of SEC, Terraform Labs, Dogecoin, they
Right.
refer to stablecoin as a yield-bearing stablecoin. And in that instance, it was a security. I do agree that we need to, as we start using terms, we need to have parameters, we need to define them. But at least for this point, as long as they're used consistently and not arbitrarily,
Right.
getting in people's minds that there are certain things, there's certain characteristics of things that resemble securities,
Yeah.
right? Traditional securities. And then I think this is the SEC's acknowledgement that yes, and there are certain other things that don't, right?
Right. Right. And Josh, the reason I bring this up is, we are all doing our WSBA trip to DC, and these will be some of the topics that we discuss. David, let me pull you into this to the extent you want to comment on some of this. I know you've been hitting the road quite a bit the past few days. Is there more clarity, like when we put our market participant heads on, and not necessarily through the lens of the law? A lot of the colleagues I have in this space that you and I know are saying, well, things are getting clearer. It'd be nice to be codified. It'd be nice to have that framework written down, but things seem a little clearer. Are you seeing it the same way, David?
Yes, first of all, I am, and I've been swamped, so I have not had a chance to dive into it as much as I would have liked. But I did see Drew's tweets and his analysis, and we happen to talk separately, and I do agree with his approach. And yeah, I'm aligned where Josh is aligned, and I do note the irony that Caroline Crenshaw is the person who also didn't want to approve Bitcoin ETFs after the court system,
Yep.
had gone ahead and approved it. And yeah, the irony is a little bit overwhelming too when you think about how we didn't get a lot of clarity out of the Gensler run SEC. So
For everyone in the audience, David, I do want to point out that David Brill is busy when I text him around 8, 9, or 10 o'clock at night about something in the market, and he doesn't immediately respond. Then I realize David's really, really busy.
yes. And then on top of that, I had to sweat out watching my Michigan Wolverines barely squeak out a win last night while multitasking. But yeah, I really want to dive into it more, but I do think that we are getting some of the clarity we need. And look, we don't have a new, SEC commissioner, so I think that the chairman, and I think in the meantime, the commissioners are laying the groundwork for that when Paul Atkins does come in, that things can move forward. So I think this is important steps. And regarding market participants, yes, remember a lot of the companies in the space, the traditional companies are regulated entities and they need more clarity.
Yes.
So I think that these are steps towards that. And again, I'd push back on Renshaw's analysis.
David, thanks so much. Josh, I cut you off a bit earlier, but what were you going to add?
Oh, I was just going to say, Caroline Crenshaw, if we remember correctly, I think she was the subject also of the Vote No campaign by many. And
Yeah.
also, if I remember correctly, although this might not be the case, so please correct me, but I believe that if there were only 3 sitting commissioners, she would be one of the 3. Like, my recollection is that you had to have at least 3 commissioners agree
Yeah.
to a commission decision. And if this is her position, I mean, if we think about what happens at the staff level, of course, is what happens at the commission level. I think it kind of points us in a direction of how far some things can go right now.
Yeah.
I do have to say, though, I am super excited to see this today, how we got here and how we get out to finding security status, which is the first of the roundtables that the SEC's Crypto Task Force is hosting. There are some phenomenal roundtable participants, including multiple members from the WSBA, including our friends Louis Cohen. We also, I'll just quickly read the whole list just to be fair to everyone, right? So it's Colin Spelton, Sarah Brennan, Chris Brummer, Louis Cohen, Coy Garrison, Teresa Goody-Guillen, if that's how you say your last name. Apologies if not. Miles Jennings, Lee Rainers, Benjamin Schifrin, Rodrigo Serra, and John Reed Stark. So it's quite a bunch of different personalities. If you
And perspectives, yep.
yeah.
But it is telling, Josh, to that point. You can open request participating in the roundtables. We will do that post our next week meeting in DC. But it is interesting to see that openness from the commission and the crypto task force to just have people come in and actually, and I don't mean this to be disrespectful, actually listen to those industry participants, which is a market shift. Josh, David, I do want to go to one other thing as well. There's a lot going on at the SEC, and I keep talking about the trip we'll be doing next week, which is very, very important. Meeting on the Hill, meeting with the SEC task force. The other thing, Josh, David, I wanted to talk a little bit about in the news this week was Ripple. And I hate to sound as ignorant as I'm going to sound, but I am a little confused. I did see Brad Garlinghouse, and I saw the Ripple team and a lot of folks saying the SEC is going to drop this case. The SEC is going to drop this case. Go forth and build. This is fantastic. And a lot of people with, Ripple's pumping, David, and all of that good stuff. But I haven't heard anything from the SEC. What am I missing?
I don't know that you're missing anything, Ron. I think that it's on its face that they're not pursuing the appeal at the district court level. They're not dismissing their appeal at the circuit court level, I believe is correct. And so I think the issue more is, I don't think they really have to say much more than that. If they're not pursuing the appeal, they're not pursuing the appeal. Look, I think Ripple is more complicated because you have that $125 million, I don't know if I want to call it a judgment, but you have that sitting out there, and a restraint on Ripple of selling XRP to some participants in the industry. And that's the part that's really the meat of what is still outstanding, and also what I think Ripple is negotiating. And I don't have firsthand knowledge, but just what I'm reading and what I'm hearing is that, Ripple wants to negotiate a better deal on that issue, and especially regarding selling XRP and any restraints that they may have. And that also could be a knock-on effect if they wanted to do a public offering and do an IPO. So I don't think the SEC has to say much more than that, Ron, and they certainly wouldn't comment on ongoing negotiations. So I think we've heard what we're going to hear for now.
Josh, go for it.
Yeah, so someone contacted me yesterday before it came out that the judgment still stood, right? And was asking, this isn't privileged or something, but was just asking me if the appeal was dropped, does that mean automatically that this judgment doesn't exist? And what I said, all caveats apply. This is not legal advice. I'm not a litigator, but I said, listen, absent some kind of agreement in writing, to the extent that they even could agree to that in writing to drop that, because I suppose it's owed to the SEC. I don't know to what extent it's owed to taxpayers or something like that. So holding all that aside, just this idea that, as I was trying to explain to the person, the SEC appealed the part of the case that it lost.
Yeah.
Right? The other part still stands. And so I think that's important. And I think people should still remember that. Because again, we're back to the Howey test, and the facts and circumstances of that situation with respect to the primary sales to institutions, that still stands as law. Now, how much precedent it's going to have in a different circuit, and even in the same district, who knows? But I think it's important, again, to remember that even with the meme coins, even with the mining, the SEC, of course, is hiving off pieces, right?
Yep.
To say potentially to purchasers, you can do this, but don't come to the SEC for protection if something goes wrong, right? But again, it's still the Howey test. I just think, again, it's so refreshing and helpful to be given examples of what isn't enough. Because even if you go back to the Dow report, I remember the common refrain back then in 2017 was like, okay, so the SEC has told us that something that looks like a paradigmatic security, right, a virtual venture fund, involves, at that time, right, your mileage may vary now, involved the offer and sale of a security, and says that it's many facts and circumstances. How about you give us an example of what would not be? And all we really got were things that were either walled gardens, right, turnkey jets, or whatever it's
Right.
called, and the like. And this is a material move, in my opinion.
Josh, it reminds me of the meme that was floating around a while back, which was someone saying the SEC telling a token issuer, hey, you violated regulations. And the token issuer says, well, what regulations did I violate? We can't tell you. What did you think you violated? So it's always this, but it is interesting, this kind of refreshing perspective of a regulator, Josh, elaborating on the idea that not everything is in their jurisdiction. It might be in someone else's, and keep that in mind. David, I want to expand upon that a little bit if I could, and want to pull you into the kind of market reaction to this. And again, I'm not trying to be dense about Ripple, Josh, but I do want to talk a little bit about, I'm slightly surprised by market reaction to what essentially is that news. David, let's paint a picture here. If that $125 million penalty, whatever it may be called, goes away, is that the thing that is the catalyst for market movement? It just feels like the more market sees relatively good news, you hear the word tariff somewhere, and then there's the market bottom falls out again. What is the dynamic happening here?
Well, look, for starters, XRP's gone up, I don't know, 300 or 400% this year. So we can't forget, yes, it was over $3 at one time, but it's still around 230, 240. So I don't think, you can look at that and be like, whoa, why didn't it move? Because it really had a big move already. And so I think a lot of this is priced in. Look, I'm not involved in the Ripple case. I can't see how that whole fine goes away. I think it's more important about the selling of the certain tokens, the certain investment contracts and how they're characterized is the most important part. I think they would pay the $125 fine tomorrow if that part went away. That's just my sense. Regarding the markets, I really think it's really this economic uncertainty. And also, I really think it's a framing issue. I think if the administration had come out and said, look, there's been this uneven policy around tariffs, and we're going to come out and we want reciprocal tariffs. Anybody who's putting a tariff on us, we want to have a reciprocal tariff. And I think the majority of people would be like, that makes sense. I can live with that. And I agree with that. I just think that because it hasn't been framed that way, and because, we've had sort of a volatility of statements and moving back and forth, that there's been this uncertainty in the market. But I do want to reiterate that I think we've seen from the first term with President Trump, this is the way he negotiates. Yeah. So I think that he uses carrot and stick, and a lot of stick and maybe a little less carrot, but this is the way he negotiates. And I think the market would be better off sort of taking in what he has to say, but actually seeing what is actually done. But that being said, when you're managing a lot of money and you have a lot of people's, accounts that you're working with, you may not have the liberty to do that. But I think sort of sitting back and looking at it a little more pragmatically, that's the way I think about it.
David, I feel like we're in this weird world where you and I generally are up early in the morning looking at economic news and business news, and I'm always slightly nervous about what the next statement from Washington will be for that uncertainty factor. And David, that's playing out. Tell me if you disagree. And Josh, certainly, be part of this conversation from a macro perspective. That uncertainty is not just impacting crypto, but it's impacting broader markets and equities as well. And again, nothing we talk about is investment advice, but this is a shockingly different market today than I thought it would be on New Year's Day. Josh, do you agree?
So I do agree that it's different. At the same time, as you guys have pointed out, and hopefully people are recognizing that you've pointed out for a long time, so much of the data was wrong. And it was incredibly wrong. So really, I think what we have to think about is maybe it would be worse right now. Maybe post-election, if it had gone the other way and then the numbers shook out, maybe we would be in a much different place. I do think I agree with what you guys have said. I also wanted to say that I thought this isn't a macro view, this is a very specific statement, but in the at the Digital Asset Summit,
Yeah.
Today with Trump speaking, right? The first time a sitting president has spoken at a crypto conference.
Yep.
It's big. I mean, I think the larger pictures, I mean, certainly the housing market, all kinds of questions about whether a recession is coming, question about whether we're in a recession.
Mm.
There's a lot going on,
Yeah.
but I do wonder just what it would have been if it had come out that all the numbers were wrong post-election.
Josh, thanks. David, that brings us to, and Josh recognized it for us, and I'm grateful. The idea that, it's not the data, it's the revisions. And we saw the Fed decision this week, David, and its kind of impact. The Fed decided not to make any changes, keep within the range. I think it's 4% to 4.25%. I could be wrong. Sorry. David, is that a wrong call, given some of the things you and I've seen in revised data?
Oh, that's a good question, Ron. First thing I want to say that also all of our views are our own and not of our companies. I definitely want to reiterate that.
Yes.
Look, I want to kind of even step back a step further. I really think that, we are I think the markets are not where we thought they were going to be, because the news on the regulatory side has been really promising.
Right.
And I think it's really, look, we don't have new legislation, but we're really on the right path. We have the right framework to move forward. We have an engaged regulator. We have legislators who think this is a priority and an important agenda item. I think the stars are aligning for us as an industry moving forward. I think this is one of those times that it's the macro issues outside of our industry that's just really impacting where the markets are.
David, let me weigh in on that one moment. And Josh, I'd love your opinion as well. I agree with you, David, but I'm going to push on something. And you and I have, for the past several weeks, have repeatedly said in person and on the live stream here, who is doing the selling? And shout out to CoinDesk. They had a really interesting exposition, David, on the carry trade. And I'm probably getting that wrong. Is it the carry trade? Where, buy the ETFs, but short the futures.
Yeah.
I wonder how much of the market downward pressure in crypto is institutions waiting for the bottom, right? Because the basis trade, so many of them are doing the basis trade. They'll long the ETF, they'll short the futures, or different iterations of that. And that was a pretty steady money earner for them all of 2024. You're looking at 1%, 2%, 3% consistently every single month. I wonder how much of it is institutions waiting on the sidelines for the bottom, and the basis trade becomes profitable again. David, is that overthinking it? I know I ripped up the script, but I love your perspective and Josh's perspective.
No, look, I don't overthink it. I don't think it's overthinking it, but I'm also thinking we need to look in terms of, who's buying. So are institutions buying for the long term, or are they buying to trade? So yes, I think the fast money is, taking the money and run, so to speak. But I think that the money that's holding it for mid or longer term, they're still accumulating, just they're accumulating less. And again, things that we've said before is that you still have a lot of people who are in wirehouses that they can't buy these ETFs at the wirehouses. Right. Until recently, until SAB 121 was revoked, or SAB 122 replaced SAB 121, banks couldn't custody crypto, so they weren't going to be buying spot crypto either. And, so there's a lot of moving pieces. I think the other broader issue is, from a liquidity standpoint, is why are you going to invest in this space now besides Bitcoin and Ethereum? And while I'm a big believer in some of the other altcoin projects, especially some of the large ones, I think for the general audience, I think we need more compelling narratives to get more retail folks interested and involved.
Josh, weigh in on this. And the reason I'd love your opinion, particularly given your perch and the things you do, and certainly can't speak to specific clients, but you've got a wide swath of clientele that you get perspectives from. Is some of what they're seeing in the market impacting their businesses or their plans?
I mean, perhaps on the margins, but I think there's a lot that people are fired up to do. I mean, I saw some really good tweets by one of the Jasons from, if you go with the name Jason, it's generally pretty good in our space.
Yes.
But yeah, Jason Yackman from Digital Asset Summit, right? DAS. And I'm just going to read them because they really resonated with me. One of them, he said, one of my biggest takeaways from dozens of meetings at DAS 2025 will, quote, actually be the year we see major crypto M&A. And then he also had another tweet that went into a bit greater detail. And I'm just pulling it up now because I thought that it was spot on, honestly, and it's very consistent with what I'm seeing. It says, some thoughts on exchanges, fintechs, and brokerages from dozens of chats with founders and execs at DAS. 1, US exchanges are racing to offer equities. 2, Asia exchanges are racing to enter/re-enter the US. Definitely some that. 3, all crypto exchanges are sitting on a lot of cash and highly valued equity. They'll accelerate the above with acquisitions. I can't speak for all, but I agree with that too. Okay, fintechs are racing to offer crypto assets top 100, not just a few. Everyone is thinking about launching a stablecoin. Yes, yes, yes. And even traditional brokerages are now thinking about how to offer crypto tokens. Jason's prediction was, assuming that the market structure bill goes through, which he believes should happen by August, all of the above will happen in 2025. Those are bold statements, but I don't think they're unrealistic, and they're consistent with.
David, there's a really consistent feeling, just building off of what Josh has mentioned, and I agree with you, Josh, just based on the conversations we have, that Q3, Q4 will be the banner portions or quarters for 2025. David, does the altcoin market come back in 2025? And I want to tear up the script. I got a follow on to that, but I'd love your thoughts on the latter part of the year.
Well, this quarter has been the worst since Q2 of 2022 for altcoins. So I certainly hope so. Look, I will say this, both on a substantive level, like on a technical level, I think the altcoins need to come back from these levels, because if they were to have another sell-off down, it would really take a lot of value out of the altcoin space. Even Ethereum is down much more than Bitcoin has been down, like on a percentage basis. So I think structurally, like this needs to sort of be a bottoming area or a consolidating area, or maybe a little bit lower from here. But on a fundamental level, I do think it's very bullish for the altcoins and for the whole ecosystem. And look, there's always that buy, sell in May and go away. And so we may have another one of those sell in May and go away scenarios. But I do want to say there are a couple of sort of bigger issues at work that could, be positive. One is, I think if we were to get legislation enacted and passed, I think that could be an immediate uplift for the market. Mm-hmm. I think if the Russia-Ukraine war could be resolved, I say resolved because I don't think the parties. I think the parties, still have some major issues to deal with. But if there could be a meaningful ceasefire towards resolution, I think that could be really bullish for the market. And I also think if we were to see some sort of final resolution in the Middle East, especially around shipping, and what's going on, with the Houthis, and I think that would also be very beneficial. I mean, again, beyond the personal level, I'm just talking about business. But I think a resolution to the conflicts in the Middle East as well could be very beneficial for the markets.
David, broadly, a resolution to the uncertainty we're seeing across so many different aspects of the global macro picture. Josh, go ahead.
I was just going to say that, I don't know if you guys saw it, but I had heard that there was yesterday a filing by the New York Stock Exchange to submit a proposal to the SEC that would allow staking for Bitwise Ethereum exchange traded funds, so ETFs. So I think that's been one of the things that people have pointed to as to what's been holding back the ETH spot ETFs. Yeah. And so, this begins the run. I also saw, I don't want to mention which entity it was, in part because I don't quite remember, But I recall a large financial institution just in the past day or so being quoted, and it may have actually been from a conference or something. I'll try and find it later. But as saying like, there was no doubt in our mind that we wanted to build on ETH, right? Like to use Ethereum.
Yeah.
And so I forget which one that is, and I won't hazard a guess. But I do think there are a lot of bright points out there, and I think like with this whole idea of covered crypto assets, I mean, it may breathe new life into projects that have really been stifled for so long.
Josh, good point. And you mentioned Ethereum. I just want to back up David's data comment. Ethereum's down over 40% year to date, David, and it does feel like quite a bit of oversell given the scope of the ecosystem and what's being built on the L1. I'm going to make a prediction. It's not a wager, David. Please do not smile about it. But I think one of the big positive catalysts for the industry, and I'd love you both to tell me if you agree or disagree, going off script again, is a crypto-related firm finally gets a Fed master account this year. I won't name names or anything like that, and that's just that's my perspective on the catalyst that will really propel things forward. David, Josh, is that kind of an ill-advised prediction on my part?
No, actually, I want to go back to something, we talked about, I think last week on the podcast, about how not having staking has really hurt the Ethereum ETFs. And the idea that you could own a crypto, product and get a 3 or 4% yield on it, ETF product, I think that would be really attractive. The other thing I think is I really believe an index product, whether it be a top 10 cryptos, a top 20 cryptos, would be really popular. I think people want exposure. And I think if people could get exposure in a way where maybe it's like Bitcoin ETH in the next 8 or Bitcoin ETH in the next 18 by market cap, I think people would really be interested in that.
David, am I misrepresenting though, or misunderstanding when we talk about ETFs and staking in the crypto space? I don't want to go too deep into it, but there are logistical issues and challenges with that from an implementation perspective, even if the Fed approves a staking crypto ETF. Is that correct?
I mean, look, I think there are, mechanically, there are definitely some things that have to be worked through, but I have to believe people have had the time. They've had these filings out there, and I got to believe that they've thought about this quite a bit, and and have a mechanism for doing that. So I haven't read the S1s, but I have a belief that would be in order, because I don't think you make that filing and then you're like, oh great, we've gotten approved, and now we have to figure out how to do this.
Fair point. S1s don't make the most exciting reading. That being said, David, Josh, go ahead.
So I was just going to say, just following on the point about banks and Fed master accounts and things like that. One of the things that Caitlin Long posted just in the past day or so had to do with the next step by the OCC, which is to remove reputational risk examinations as part of the OCC bank exams. As she noted in a post, she said it was subjective and was captured by some politically motivated managers at the federal bank regulators for use as their cudgel against industries and people they didn't like. Good move, OCC. That's not a quote from me. That's a quote from Caitlin, but we can definitely see where she's coming from personally. Speaking only for myself in a personal capacity.
Absolutely. Look, we've been privileged to have. We all know Caitlin. We've been privileged to have her join us at WSBA events. She is a fierce advocate for innovation and one of the brightest minds that I think any of the three of us have spoken to, and that's saying something, because she gets that system very well. Josh, I want to ask for the audience's benefit, what's it like to have a private chef make you lunch? Like, how's that planning out?
I'm not.
No comment?
I have no comment. No, I mean, just for the benefit of everyone, since you can see these kind of funny things behind my head, I had some meetings, and then I knew we had this video cast, so I asked a place that I sometimes go if I could go upstairs to an empty room and do our webcast. So
how amazing of a co-host, David, are you both, that you will do it on a train? Josh will co-op the private room at a restaurant. just to make sure we get this out there. I can't tell you how grateful I am to you both.
Like green eggs and ham, right?
And I'm hungry somehow. Thanks for that, Josh. Josh, David. Let's wrap it up there. We've got a lot of work to do. I certainly do, and I know the two of you do have over the weekend. We're visiting DC next week. What are your thoughts on? We'll be talking about a lot of stuff, Josh and David, with a lot of different stakeholders in DC. What are your anticipations about the trip? It's always a great trip in my mind. We've done it for several years in a row. What's important for us as industry participants to bring to the table in your mind? David, what are your thoughts?
Look, I think we as a collective can bring our pragmatic experiences. I sat across from the SEC representing certain clients where we couldn't get answers, where they asked us, they made allegations that we were in violations of certain rules, and they would never give us the proof. They would just say, this is what we think, and we would ask them which ones, and it was kind of that Spider-Man where the fingers are pointing in two different directions. And so having lived that, and having lived through these different scenarios that we've gone through, both counseling clients in different capacities, I think we can bring that experience and knowledge to answering these thorny questions and really help collaborate specifically on these issues. And I think from what I've heard from folks that have been before the task force, that the questions and the level of specificity is really, everybody is digging in on all sides to find resolution to some of these thorny issues. And I think all of us can bring our, very diverse and extensive experiences in this space to help move these discussions forward.
Josh, go ahead.
I would say, I think it's going to be very important to go there with ideas, specific ideas, as you guys have said. And as the task force itself has said, I mean, my experience with the SEC has been a bit different in that I never sat across from them having been accused or having a client be accused of potentially doing wrongdoing. Nevertheless, I have sat across from them on many, many, many occasions where very well-meaning clients, were proposing solutions. And I will say the staff was quite collaborative, and it ended up, nevertheless, their hands were tied by Gary Gensler. So I think in that sense, while there was not adversity, there was unfortunately not able to be the kinds of moves forward that we'll be able to see now.
Yeah.
I wanted to add something.
Yeah.
Not to interrupt you. I've sat on both sides, both in a potential adversarial scenario, a non-fraud adversarial position, but also representing clients who wanted to get products approved and brought to market. And so, I echo Josh's view that the staff wanted to work with us, but at some point they just hit the wall. And so it's really so meaningful that we've seen this change and this ability to have a dialogue, a real open dialogue, and, work through these thorny issues.
Yeah.
To be clear, I was not suggesting that dude was always adverse to the SEC. I was just giving the example.
No, it was, yes.
I was, yeah.
I'm with you. David, Josh, thank you both so much. I've got one last order of business, not necessarily live stream related, but I am still reeling from traumatizing Emma Channing last week by saying we hadn't scheduled David's steak dinner. We will get that on the docket for everyone who's watching and sending me notes saying, why haven't you fed David? In my defense, I will point out that David's taste is so refined that the restaurants he picks have financing departments to cover the dinner. So we will definitely get that on the docket. David, Josh.
Unlike where I go.
You know what? A hearty meal is good anywhere, Josh. David, Josh, let's leave it there. For everyone in the audience, thank you so much for joining us. We will be back next week, hopefully. I don't know what my train schedule is going to be. We're going to be visiting DC on Wednesday evening and Thursday. Josh, David, looking forward to seeing you both there. If you've got additional questions for us, info@wsba.co. Thank you again, and we will leave it there. Have a great weekend, everyone.
And everyone tune in about 20 minutes for the SEC's first crypto roundtable.
I will be watching over green eggs and ham, apparently, Josh. Thank you so much, everyone. Bye-bye.
Take care.
Bye, everybody.